Good afternoon and welcome back to Trading Options Network. Before we go ahead and get into anything, let's go ahead and get our disclaimer out of the way. Of course, everything we discuss is solely my opinion, not the opinion of Trading Options Network. So do with the information what you will, but take responsibility for your actions. And also, of course, be sure to like, follow, or subscribe on your favorite social media platform to stay up to date with everything that is Trading Options Network. So let's go ahead and get into everything. All right, so overall, it is there's more green than there is red in the S&P. There's more green than there is red. Okay, but a lot of the bigger companies are the red. So if we go ahead and look at the S&P chart right now, it is not super green. It is not taking off by any means. We are still we are moving up. There's no doubt about that. And as I've been saying before the whole time, I believe we are in a semi-bullish market right now. I don't think we're going to be taking off in either direction until after the elections happen. We did have a little bit of a push on Monday, which I'm not surprised due to the fact that there really wasn't any information that was put out. The banks were closed. It was a bank holiday, so there was no financial data released. So we kind of just continued the momentum from Friday. And then Tuesday, we did have a little bit of a pullback. Today, again, we're just kind of sitting in the weeds where we were kind of yesterday. Not really doing too much. But if we go ahead and look at the equal weight, as you can see, we are higher than we were yesterday. And again, that is due to the fact that we do have a lot of green in the market in the S&P right now. What do I expect moving forward? I mean, kind of more of the same. We do have the retail sales coming out tomorrow, as well as the unemployment claims coming out tomorrow. As you can see, these are red on here, so that does essentially mean that we could potentially see some why can't I think of the word right now? Some volatility tomorrow. But who knows? I mean, we'll see what happens. If you do follow me, of course, my previous stock of the day was NEM. That's Newmont Corporation. Here is the chart right now. I really like it. It did kind of push up higher than the previous high, which is great. So we are setting a higher high. However, it did kind of stall a little bit today. So again, if you know me, you know I love this setup because what could be potentially resistance previously can now be acting as support. So as long as we finish higher than this and then we don't gap down below this tomorrow, don't be surprised if we're opening up a position. I will say it does have earnings coming up though, so you have to be careful with that. I think it's the 23rd, October 23rd. After the market closes, we will see earnings for this company. So that is a week from today. So again, just got to be careful with earnings because earnings will sometimes not care what the market, what the stock is doing. If we look at this earnings right here, the previous earnings, obviously the stock has been really, really great. And then earnings definitely took a dive. I mean, it was down 4%. Now on the flip side over here, this one was up 12%. So, again, earnings doesn't care what the chart looks like. So those are the times when, as a technical trader, I don't really get involved too much with any of my positions. But I do like this chart. Obviously, this is a great chart. If you recall, my previous tip of the day was the trend is your friend. Okay. And my last tip of the day, again, that I put out, of course, is following along in my trading plan, and that is being able to define and identify your support and resistance lines. So I'm going to actually use this chart because I could very easily put one right here. Okay. And one thing I did mention in that video about support and resistance lines is they are subjective. Okay. I can put a support and resistance line here and somebody else may disagree with it. That's fine. I don't have any problem with anybody disagreeing with it because let's face it, it's only bounced off of this line one time, really. I mean, granted, it was a couple of days, but overall, I mean, it really didn't do too much. But to me, this is a resistance line until it passes above it, and then it could potentially become a support line. This purple line, this one's pretty easy to see. It's hit that line quite a few times, and I can go back and it hit it even more. Okay. Same with this blue line right here. Okay. It's come down and it's touched it quite a few times. That is a great support line. So again, my last tip was being able to identify your support and resistance lines. And yes, they are subjective. However, as long as they fit your trading plan and your trading style, then that's all that matters. See, again, for me, I love being able to see when a stock goes above a previous high and then it comes down and then it bounces off of it. I love that pattern. That is a great pattern for me. So if this happens tomorrow, or, we still have 45 minutes before the market closes today, we did go down a little bit. I'm going to zoom in there. We do have a little bit of a lower wick there. It didn't come all the way down to what was previously, support, or what could potentially be support now, but that's fine. As long as it does not gap down and open below this line. If it does not open below this line, I think it's a great opportunity for a position in NEM. And don't be surprised if you see me opening up a position in NEM tomorrow morning, again, if the stock does not gap down. I really like the stock. It would be a very, very short-term trade, so I'd probably be looking at options expiration dates that are about a month out because, yes, I will close it within a week, but I don't want to get crushed by theta if it does just kind of go sideways. Excuse me. That being said, my last stock of the day was NEM. Coming back to this. So what is definition of a support? Well, in my trading plan, a definition of support is a key price point that you would expect the stock to come down to before making its next move up. Okay, again, I would expect this to come down to this line before making its next move up. Now, again, does it have to hit it exactly? No, it does not. Does it have to come down and get remotely close to it? Yes, and it kind of did that today. I mean, it's only, if we zoom in here a little bit, that is what the low was today, 56.16, and that's at 55.85. So we're looking at 31 cents. It was 31 cents away on a stock that's $55, $56. That's less than 1%. So would I have liked it to have gotten a little bit closer? Yes, but again, I don't mind that. The most common support level can be marked by a horizontal line. However, you can also see support lines that have a positive or negative slope. Well, I think we have exactly that in both of these right here. Okay. See, we could very easily go up to $58 a share or $59 a share over the next few days because of this purple line. That's another resistance line. The more time it has touched that price level, the stronger the support is. You'll often be able to see times where the stock price rose to that price only to move down some before rising above the price if you go back far enough in an uptrend. Okay, so let's read that one more time. The more times it has touched the price level, the stronger the support is. So again, we'll actually look at this blue line down here. All right, it touches down here, touches here, touches here, touches there, touches there, touched a lot. You'll often be able to see times where the stock price rose to that price only to move down some before rising above the price if you go back far enough in an uptrend. That's kind of what we had. I don't want to say right here. I mean, it definitely did go below it. You can argue that right here as well. But that one's a little bit... It's hard to find it in this particular chart, but again, it's just a definition that I have in my trading plan. Definition of resistance. Resistance is a key price point that you'd expect the stock to move up to before making its next move down. Okay, we've seen that happen quite a few times. We look at that purple line. It's right here, right there, right there, right there, right there. And maybe in the near future, it will again. The most common resistance level can be marked by a horizontal line. However, you can also see blah, 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 blah. Same exact thing as support, okay? And same thing here as support. The more times that it has touched that price level, the stronger the resistance is. You'll often be able to see times where the stock price came down to that price point only to move up some before dropping below the price if you go back far enough in a downtrend. Well, we're not in a downtrend on NEM, okay? You know, essentially if you flip this upside down, it would be similar to what we had happen right there. So again, my last tip of the day was, know how to identify your support and resistance lines in a chart. They will really, really help you out. I really like FinViz because, again, if we go with these settings, you can actually put patterns on here on your daily charts, and they will actually put those lines on there for you. So it's a great, great tool. I love it a lot. Also, NEM, speaking of, since this is my stock of the day the other day, CCI is getting higher. It's a higher high than it was before, so that's a good sign. And the MACD, just the MACD line crossed over. So that's also good. That's very positive. And we like that. So again, NEM, there's no reason for me to believe this does not go higher. You could argue that we have a little bit of bearish divergence here because even though it was higher here and lower there on the MACD, you can argue that that is a signal of bearish divergence, but we'll see what happens with this when this MACD is crossing over now. If it doesn't go very high and it starts trailing back down, then yeah, we could potentially see a little bit more of a deeper pullback for NEM, but until that actually happens, you still have to stick with the bullish pattern. Let's go ahead and take a look at our positions. Of course, go figure. I just restarted my computer, so this was not logged on. So just give me a minute while I pull up Thinkorswim really quick. I'm looking at it on my phone though right now. We are looking pretty decent. Philip Morris is being kind of a punk, for lack of a better term. Is being very stingy right now. Now, it could be doing essentially the same thing as what TDS was doing for a while and just kind of going sideways before it actually made its move. So I'm actually going to start off with TDS as soon as this loads up here because I love what TDS is doing. It looks really, really good right now. So charts, don't want this one. I want blue. Let's maximize this cell really quick. All right. I don't know why SOXX is on there, but TDS. Look at that beautiful, beautiful chart. Let's just get 10 there, okay? All right. So if I recall, I want to say, in fact, I think it's actually on here. Let's see. No, it's not. I'd have to look at it, but I'm not going to waste your time. Yeah, I don't want to go back X amount of days and figure it out. But we opened this position. Gosh, it's been a little while. Oops, wrong way. Let me go ahead and make it a little bit longer. 6 months. There we go. If I recall, we opened up this position back here, like when it broke out somewhere. I'm not, maybe I can see it on my phone really quick, but nonetheless, all it did for a while is just go sideways, but yet it never triggered anything to cause us to want to sell the position. I did say down here, when it got here, we're in do or die mode, and guess what happened? We did. We did not die. We did. We were in do or die. It's either going to go up or down, and sure enough, it is now breaking out. I mentioned before, the Bollinger Bands were getting really, really tight. That oftentimes is a sign that we are going to have a move in one direction or the other. You know, I'm really, really liking what TDS is looking like right now. Let's see if I can find it really quick. TDS. It was before then. Let's see, I'll go all the way back to August 1st. All right, so we opened it up on September 5th. Okay, so it wasn't here. It was when we broke out here. Okay, and I think I opened it. Um, it says the 5th. Why? That doesn't seem right. I don't know why I would have opened it after a big red day and then only for it to move down again. Unless I may have opened it. Let's see. Is there a time? 10:15 in the morning. So my guess is it gapped up and was looking green. It looked like it wanted to move higher. And of course, that didn't happen. But again, we never broke out of this neutral pattern the entire time, and now we're moving up. So overall, let's look at it. TDS is now up $1,400, up $1,000 just today. We were down about $3,000 just last week on this one. So it's definitely moving in the right direction for us now. I like TDS. If it starts to slow down a little bit, we might put a trailing stop on it, a tight trailing stop. But, let's go ahead and ride it out while we can. So, that being said, there's TDS for you. Okay. Philip Morris. Philip Morris is my one bear that I have on right now. It's the only bear I have on right now. Oops, wrong button there on my phone. I'm just pulling it up on my phone as well. All right. So, Philip Morris, we do have the straight 120 puts. And basically, when we opened it originally, we opened it up as a diagonal bear spread. And of course, our shorts expired last Friday, out of the money, so that was great. But since then, the stock itself has been kind of, it almost wants to say, hey, I want to go higher, but it just doesn't have enough steam. Now, we'll see what happens because, again, very, very similar to TDS. Look at the Bollinger Bands. They are getting tight. Okay, so we should be expecting to have a move in one direction or the other. And the second that it starts moving in either direction, if it starts moving up, I'm closing it. If it starts moving down, I'm going to let it ride, but I'll probably put on a trailing stop. Although it'll be a little bit wider of a trailing stop because I want to be able to ride it. I don't want it to have a little bit of a bounce and then force me to close and then continue to move down. But overall, I do expect PM Philip Morris to start figuring out which direction it wants to move. Hopefully to the downside for us, but we'll see what happens. Good old Howmet. Okay, we're up $960, $1,000 today. Howmet looks good right now. Again, we're breaking higher. And let's go ahead and continue holding this until it decides it does not want to move up anymore. MasterCard. So MasterCard, I was not expecting the financial sector to be as strong as it is. Let's go ahead. I'm going to pull up this really quick so we can go ahead and look at the financial sector. So there was a lot of resistance here. Resistance. And of course it broke through. I wanted it to break through. I just didn't think it was going to break through this quickly. I thought we were going to have a little bit longer of a time before it broke through, and I'm going to show you why. So here was the pennant that I was looking at, okay? And as you can see, there was still some more time where we could have gone a little bit longer sideways before breaking out, but it broke out already. So what does that mean for MasterCard? Well, let's take a look at MasterCard really quick, okay? MasterCard obviously is in the financial sector, and geez Louise, man, I still don't understand why people just they take off the Bollinger Bands to put on the 20-day moving average. It makes no sense to me at all. I think it's freaking retarded because the Bollinger Bands contains the 20 moving average. But nonetheless, it is breaking out. It is breaking out. Now, what does that mean for us? Well, obviously, we wanted it to move up. However, our short legs, if I go ahead and pull this one up, we're just the 505s. Okay? Well, we're up $7 today, and we are blowing past 505. Now, in the next couple days, what does this mean for us? Well, it means we're almost guaranteed to be profitable. Almost. Okay? We're up $1,200 overall in the trade. Oh, now $600. Gotta love those bid-ask spreads sometimes. We were up over $1,000 before. But again, when we blow past your short legs, you are actually going to start losing money in a diagonal spread, okay? Or losing profit, I should say. Not losing money, but losing profit. So we have significantly, now it's saying, oh no, I'm sorry. I was looking at the zeros. Like now it's saying 0, there's no way. Still at 692. Now, what I'm bringing up here is we are at, what, 514? Yeah, 514. If this goes down to 505, then we are going to gain $7,200 in value, almost $8,000 in value actually right here, okay? This one will lose probably, I'd have to look at the delta, but my guess is it'd probably be around 70 to 75 cents per dollar on average. So we'd probably lose about, about 7 grand maybe. Yeah, probably about 7 grand there. So we'd gain about 8 grand in value here, lose about 7 grand in value there, which would obviously be an overall net gain of another $1,000. So we could literally drop 2% almost and have this and actually make money. If it stays flat, okay, we'll call it, there we go, 10. Thank you for changing to 10. It makes my life a lot easier. We will still gain another 75 cents roughly in value if it doesn't move any higher than here. But if we do the math, 505 plus 10 is 515. So, we do have a little bit of money to be made there if it doesn't move higher. But again, every penny that it moves down will actually make more for us. If it continues moving up, then we may have to actually close it for a smaller gain, because again, once it gets past your lower leg in a diagonal, it does take away from the profitability, the profit of that trade. ExxonMobil. So unfortunately, ExxonMobil got hit with some bad news the other day, and of course, it decided it wanted to move down, gap down when it was looking really, really strong for us. But after bad news, it has not gone down much further. So that's actually kind of bullish in a sense. So as long as it stays above the 20-day, I'm going to keep holding it. We have, how long? 30 days till expiration on the longs, and we have 9 days on the short. So in all reality, as long as we just needed to go up to about 125. That's right about here. Not too far from where it was when it gapped down. Okay. Overall, we are down on this trade right now because of that gap down. But again, it's really not looking all that terrible. We have 9 days for it to hopefully go up as long as it stays below 125. So we're actually looking really good right now on that. And let's see. Did I hit them all? I think I did. Oh, UDR, I forgot to remove that one. So unfortunately, UDR did hit the trail stop. So if I look at UDR, sure enough, it just does seem to want to go higher. So I did go ahead and put it back. Why? Oh, that's SYY. I thought that said SPY for a second. I'm like, that shouldn't be there. NEM here. Okay. So I did put UDR back on my bear watch list, because if it does bounce off of the 20-day or move back below the 50-day, or the 20-day does cross the 50-day, then it could be this could just be a bear rally and nothing more. So I did leave it there. But if it does continue to move higher, then you know what? We might actually move UDR from our bear watch list to our bull watch list, because that was one heck of a run down, and I didn't see any reason for it to stop. There really wasn't any reason for it to stop. But it did bounce. There's no doubt about that. It did bounce. So we did close it for a little bit of a loss. Not huge. I'm not too worried about it. Again, it's back onto our watch list because I still think there's opportunity here. And we'll see what happens. And again, we already talked about NEM. So that's really all I have for you guys today. I hope you enjoyed everything. I hope you learned stuff. As always, if you have any questions, don't hesitate to reach out. That's what I'm here for. But let's go ahead and keep making money. That being said, I hope you have a great rest of your afternoon. Take care.